Hello guys, welcome back to another weekly market breakdown, and in today I'll give you guys an update on the dollar index, the Nasdaq US 500, the Dow Jones, as well as Euro USD and gold. The reason why I excluded GBP USD, that's because we have the Bank of England rate decision today that is expected to be a 75 basis point. However, we know that inflation is sky high on there as well, but I'm not going to speak too much about that. So we're going to look at all of these pairs from a technical as well as a fundamental perspective. And if you are new to the channel, a sub would be appreciated, as I provide valuable educational content on a daily basis. And if you enjoy the video, please hit the like button for the YouTube algorithm. And before we get started, I just want to give a special thank you for the members of the channel over here. All my good people, from the top to the bottom, I just want to say I really appreciate the support, and I hope you guys are still enjoying the services that you receive out there as well. Now, without any further ado, ladies and gentlemen, it's very important to keep in mind that the current situation that we are in now is banks are just hiking interest rates left, right, and center. Like I said, the Bank of England is coming through to hike those interest rates today. We had the Swiss franc National Bank that also hiked interest rates today, also 75 basis point. I can see over here that they hiked those interest rates today. And it's just been, we've got the GBP also that's going to hike interest rates by 0.75. We saw the Feds came through yesterday and they hiked interest rates as well. So you can see how banks are just hiking interest rates left, right, and center. And if you've been on the channel long enough, you know that interest rate hikes positively impact the currency only against the currency that is doing weaker. So yes, one bank in particular is the Japan. So the Bank of Japan had not hiked interest rates yet, and that's why the Japan yen is so weak. But we can see here it says that Japan intervenes in the FX market to stem yen falls after the Bank of Japan keeps super low rates. So Japan is one country that has not hiked the interest rates yet. And if you ever looked at the Japan basket, you would see how weak the Japan yen is doing. So hopefully today they are going to come out, I think it was 1:30, and to come and speak about what they what their story is going to be, guys. But without any further ado, we're here to talk about the dollar index. Now, first things first, we know that the Feds came through yesterday and they hiked interest rates by a 0.75 basis point, and by now you should know what the impact is going to be based on previous videos that I've made on how interest rate impacts the market. Now, it says your US stocks futures inched higher on Thursday morning following a volatile season in major averages as traders wait another large rate hike from the Federal Reserve. It says there the Dow Jones was up 100 points, the S&P and the Nasdaq rose to 0.28% and 1.9% respectively. And basically, it also states here the Federal Reserve passed through a third consecutive 0.75 basis per percentage point increase. Policymakers pledged to continue raising rates as high as 4.6% in 2023 before pulling back in the fight against inflation. It also says here the central bank is expected to raise its year-end rate to 4.4% by 2022. Now, the Feds has obviously got a lot of room to play with, but the best way for us to measure this data is by looking at inflation. As inflation continues to increase, you can always expect the Feds to keep hiking interest rates. As inflation starts to slow down, you can expect the Feds to be not as aggressive in the way they hike the interest rates as well. Now, because of this decision that the Feds has done yesterday, we expect the dollar index to increase in value. We expect every currency trading against the dollar to decrease in value. We expect gold and the stock market, which is negatively correlated with the dollar index, to also decrease in value there as well. Now, let's go to technical analysis. Now, if you start on the monthly time frame, if you remember, I said that we can expect the market to continue higher, to go and hit the 112, and that is exactly what the market did. But based off the information that we have now, we can definitely expect the dollar index to increase higher, and we can definitely expect the market to go and test this previous level of support that is now acting as a level of resistance. On the weekly time frame, we can see we're trading in bullish territory. The market had printed and broken multiple structures. This level over here acted as a level of resistance. The market broke above that, came to test it as support. The market had now formed new resistance that we can expect the market to pull back to before continuing higher. On the daily time frame, we can see how the market printed this massive impulse. After an impulse, you expect a correction. And if you take your Fibonacci from the low to the high of this massive impulse, you can see that the market had pulled back to the 0.50. And not only doing that, but looking left, we can also see how the market broken above the strong level of resistance that is now acting as a level of support. So we've got the confluence of the 0.50% pullback, which is normally expected after a massive impulse. We have the correction and we have the break of structure that the market had tested as now as support as well. So the way in which I expect the dollar index to increase in value is very simple. I expect the market to continue this bullish momentum to the upside in the long run until we get new CPI data that's going to indicate whether or not the Feds are going to not hike interest rates as aggressively. Until then, can we expect the dollar index to increase? Now, next up, we do have gold. And if you start on the monthly time frame, you can see how gold is now trading. Well, is about to break below a very important structural level. Now, remember this was a month after month consolidation phase for gold over here. This massive bull run that we had over here was due to the pandemic. Obviously, the dollar index decreased in value, and precious metals was acting as a safe haven where investors started to buy up gold there, as well as the dollar index started to lose its value. The market then rallied up until up until we got here, and then the market actually basically just came into this consolidation phase. Now we can see how the market is about to basically break out of this consolidation phase here as well. Now the market is busy breaking out of the consolidation phase, so we definitely expect this market to continue lower if we do get a monthly close below this level. But look, the monthly is still long, so we could potentially see a pullback. Now here on the weekly time frame, we are very much in bearish territory. Now if you look left over here, you can see this level over here acted as support multiple times. The market then broke below support, came back to test it as resistance, giving us a further confirmation that we can definitely expect gold to continue lower and then potentially test that previous level of resistance, acting as support at the moment. Let me just delete that. We're going to use that as our take profit level. Here on the daily time frame, what do we see? Now, from a daily perspective, it's quite clear that the market had probably not woken up to the news that we received there as yet yesterday. Now, this is a very easy, and I'm just going to use the structural level over here. Now, this is quite easy to trade. We have a strong level of support that the market had broken, tested it as resistance. Now there is no question that the market we can definitely expect the market to continue lower from exactly where it is now. Now this is the way in which you can approach it. Now the more safer way would obviously be for the market to break below this level of support, because once support gets broken, then on the retest you can then start looking for selling opportunities. In doing so, will the market then also print this massive impulse correction and impulse pattern to the downside? Next up, we have the NASDAQ 100. Now, starting on the monthly time frame, we can see the NASDAQ 100 is about to approach this level of support that I have been talking about week over week, that we can expect the market to come and test. Here on the daily time frame, what do we see? Now, from a daily perspective, we can see how the market is also currently testing previous level of support that is now acting as a level of resistance. Now we have an impulse and a correction, and if you take your Fibonacci from the high to the low of this massive impulse over here, we can see the market had not tested the 0.382 yet, but we can see the market over here had tested this structural level over here. So we can see the market actually did provide us with a pullback. Now, there's a high possibility, again, that we can expect the NASDAQ to continue lower, purely based off a technical as well as a fundamental perspective there as well. Next up, we've got the S&P 500, probably similar price action over here. This was a setup that I sent to the guys on this year, was for the guys on YouTube. If you subscribe to the 2 daily setups, you would have gotten into this, so I'm just going to remove that. So you're on the daily time frame. What do we see? So just give me a sec. So you're on the daily time frame. We've got the similar price action to the Nasdaq 100 that we kind of expect the market. I'm just going to go as low as I can, and then you're on the daily time frame. We can obviously see that the market had broken below the strong level of support, and it's now testing it as a resistance. But one thing to keep in mind over here is that we do have price action to the left as well. So we just need to be very, very careful in the way that we do approach this. Now, the safest way for us to go about this would basically to wait for the market to break below that level. Then on the retest, definitely look for selling opportunities to the downside once again. Next up, we've got the Dow Jones. Also, they all are the same, all US stocks. The Dow Jones, I'd probably say we can expect the market to continue lower. Again, similar price action over there. Also, if you look left, you can see the Dow Jones had broken below this. No, man. The Dow Jones had broken also below this very important structural level, and the Dow Jones is now faced also with this here as well. Now, there's a good possibility, again, that we can expect the market to continue lower, but if you want to be safe, you can just wait for the break and the retest and then trade the market on that continuation to the downside there as well. Now, Euro USD here on the monthly time frame, what do we have? Now, from a monthly perspective, there's obviously more room for the euro to continue lower, and we can see the market actually came to this level. The next level we could potentially target is going to be that level there as well on the weekly time frame. What do we see? Now, from a weekly perspective, we can see the market had been creating and breaking structure to the downside. We had that fake out. We also got that structure to the left. You can see how the market printed support, broke below that, tested it as resistance, printed new support. Now we can definitely expect a retest and a continuation to the downside. The market is currently trading in heavy bearish price action up, or heavy bearish market over here. To expect the market to close there as well. Now the daily time frame is quite clear, right? I can see how the market is currently testing previous level of resistance that is now acting as support. So we can definitely expect the market to continue lower from exactly where it is now there as well. Now, I want to say thank you so much for your time. And as always, cheers for years.